From the KPFK studios in Southern California,
it's the Ralph Nader Radio Hour.
Stand up, you've been sitting way too long.
Welcome to the Ralph Nader Radio Hour. My name is Steve Scrovan, along with my co-host David Feldman. David, we have a very exciting show today.
Yes. Even Michael Cohen would flip over today's show. It's fantastic.
And we also have the man of the hour, Ralph Nader. Hello, Ralph.
Hello, everybody.
On the show today that we're all going to flip over, we're going to talk to financial journalist Nomi Prinz, who has a new book out called Collusion: How Central Bankers Rig the World. Also sounds like it could be a great Marvel Studios title. She's making her second visit to the radio hour. Last time we discussed how the Federal Reserve and their manipulation of interest rates serves Wall Street over Main Street. And there are very few journalists out there who can make sense of the complicated world of international finance, but she can because she's been on the inside, having worked in the field herself. That's the first half of the show. In the second half, we're going to be speaking with attorney Mark Rotenberg, who is the executive director of the Electronic Privacy Information Center, EPIC. EPIC works on all sorts of privacy issues involving Google, Equifax, government surveillance, cybersecurity, just to name a few. But today we're going to focus on Facebook privacy issues. And also, as always, we will find out what's going on in the deep, dark recesses of the corporate underworld with our corporate crime reporter, Russell Mokhiber. And if we have some time at the end, Ralph will answer a few of your questions. But first, let's find out how central bankers rig the world. David?
And create economic inequality. Nomi Prinz is a renowned journalist, former international investment banker, and author of numerous books, including All the President's Bankers, about the relationships of U.S. presidents to key bankers over the past century and how that influenced policy. Her latest book, Collusion: How Central Bankers Rig the World, explores the rise of central banks in the global financial and economic hierarchy and the role they play in income inequality. Before becoming a journalist, Ms. Prinz worked on Wall Street as a managing director at Goldman Sachs and Bear Stearns in London. She also worked as a strategist at Lehman Brothers and an analyst at the Chase Manhattan Bank, all of our favorite companies. Welcome to the Ralph Nader Radio Hour, Nomi Prinz.
Thank you very much. Yes, I did the rounds.
Thank you, Nomi, for coming on the show. I've often wondered about our society, which has been accused of being very materialistic and very focused on money, how difficult it is for people to understand money and banking, unless they take economics courses in college. And this has been a real problem because the more complex money and banking is, the less participation people will have in engaging with it and making it accountable to them. So you've had a long career of writing in plain English about the role of big banks, money and banking, Wall Street, consumer protection. And now you've paid attention to central banks and central bankers. And I have to ask you from the outset, can you define what a central bank is and what central bankers do? Because these are government institutions very closely working and allied with the giant private banks.
Yeah, so there's things that central banks do, as you ask, and there's things they're supposed to do, and there's things they do behind the scenes. What they're supposed to do, their day job, is to set the level of interest rates, i.e. the cost of money, so that that is effectively the level that's used throughout the financial system for people's savings accounts, for banks to use and to lend onward and so forth. And they sort of calibrate that level of money, that interest rate, by moving it up or down. And if the economy ostensibly heats up, they raise the rates to keep up with that. If the economy goes down, then they lower rates to supposedly stimulate the economy. That's the narrative. The reality is that the central banks have from their onset, and in particular the Federal Reserve of the United States, been created to be lenders of last resort to the private banks under the concept that if private banks, especially big private banks, have problems, then if we don't fix those problems for them, they will seep into the economy and hurt it. And therefore, to keep the flow of money going, there's this force, the central banks, that acts as that effectively insurance policy to banks not having enough money, or what they call liquidity, in the event of an emergency, which we saw in the financial crisis of 2008. Problem is, the emergency remedies that the global central banks have enacted since the financial crisis of 2008 have gone on for 10 years, and they have epically subsidized in unprecedented amounts and ways the private financial system at the expense of the Main Street economy.
Let's stop right here. Let's stop right here and summarize a bit. What you're describing is a massive government regulation of interest rates and a massive demonstration of ongoing corporate socialism, because basically they are there to liquefy private banks and bail them out if necessary. I want to ask you, why, when the Republicans make a career in Congress and elsewhere, and right-wing conservative thinkers assail government regulation, over-regulation, the Congress has just passed a bill to dilute the Dodd-Frank law, which was a response to the Wall Street collapse in 2008, 2009 on our economy that cost 8 million jobs, trillions of dollars of taxpayer bailouts, and trillions of dollars of losses of people's savings and pension funds and mutual funds. Why is it that they never go after the Federal Reserve for being over-regulating and for corporate socialism? They just exempt them. They go after regulation for consumer protection, for environmental protection, for worker protection. But the giant federal regulator of them all is the Federal Reserve. Why not?
Right. They believe, or they want to believe, that the Federal Reserve acts independently of any government policy or any consumer policy, despite the fact that the Fed not just regulates and sets interest rates, as do other central banks. It's supposed to be the regulator of the private banking system. Is supposed to, and has failed miserably, to see when problems are arising in the banking sector and to do something about them before they become emergencies. And as we know from the financial crisis of 2008, that not only didn't happen, but the response was this massive subsidy, corporate socialism for the banks, in a way that really dwarfs, completely eclipses any tax policies, anything that corporations have been given over the years. It's been a multi-trillion-dollar ongoing policy. There's $21 trillion of money that's been created or colludedly created by central banks led by the Fed throughout the world since the financial crisis. And the Republicans and Democrats, many Democrats, actually don't seem to get that the Fed doesn't really function independently. It isn't there as a benevolent provider of comfort to real people and the economy and to people's ordinary finances. It is a provider of conjured money when it decides it's necessary to the private banking system, and therefore into financial assets like stock markets and like bonds, rather than into the real economy in any way. They want to somehow believe it acts independently.
Now, Nomi, who funds the budget of the Federal Reserve? It doesn't get appropriated from Congress, does it?
Well, the budget of the actual operation of the Federal Reserve does get appropriated, and Congress does have the ability to reject or accept the appointees that are on the Board of Governors, and board, operating word here, of governors of the Federal Reserve, as well as the chair of that Board of Governors, the head of the Federal Reserve. So what happens is the president appoints that person. Congress can choose to reject or accept that person, as they can the full budget of the Fed. The thing is, though, that the way the Fed actually gets money and is able to produce money is that the private banks that use it as its as their backup lender and as their emergency provider of money, are supposed to reserve, which is what's called the Federal Reserve, money, kind of like premiums for an insurance policy with the Fed, so that if there is an emergency, they basically take their own money, maybe a little bit more, and sort of handle the whole thing. But what's happened is that the Fed, because there's an electronic provision of money, literally from thin air, that they can put into the balance sheets of private banks in return for different assets. For example, they bought $1.75 trillion of bad, toxic mortgage assets from the private banks that they still have on their books from the financial crisis and still rolling on. The way they can create the money to do that, to give banks cash for bad assets, is just like an electronic activity. It's like saying, Ralph, if you went to your ATM and you had $1,000 in your account, all of a sudden someone somewhere said, no, actually I'm going to add a zero, or I'll add 2 zeros, whatever, and it's not their money. It doesn't come from anywhere. That's what you then see. That's what the banks have received because the Fed's been able to literally create it electronically from nowhere.
We're going to get into that in a moment, but I want to lay on the table the close relationship between the private banking system and the Federal Reserve. The Federal Reserve relies on bank fees to fund its operations, and they have regional board of governors, and these board of governors in Philadelphia and Dallas and elsewhere are mostly bankers, private bankers. Explain how this structure works.
That's correct. So from the onset of the Federal Reserve System in 1913, the promise was that you'd have all these sort of centers of little feds throughout the country, and they would monitor the banks in their own sector, and they would make sure, their own area, make sure that the money from those banks went to basically the locality, so in Kansas and San Francisco and so forth. So there'd be this relationship between both regulating what banks do and ensuring that banks provide capital when needed to the local area. That was kind of the idea. And that came out of a crisis on Wall Street where basically the New York banks decided not to lend money to any banks across the country. Country got upset. And part of the sort of acceptance of the Federal Reserve in general was to have all these little Federal Reserves in their own areas. And the way, though, that they make money is that the share is actually like a company with subsidiaries throughout all these cities. So the Federal Reserve is the main sort of headquarters, and they basically have members that are the banks that own shares in the Fed. So when the Fed does well, the proportion of shares that these particular banks own do well as well. In return, they provide reserves or sort of fee money, the interest from those reserves, to the Fed in order for the Fed to basically operate. That's kind of the theory. Really, it's like a bunch of companies own shares in their mother company, which is the Fed, and therefore they help each other. Private banks give fees to the Fed, and they provide board of director members to the Fed. And yes, most of those people come from the banking community. And in return, the Fed, with an unlimited, unaudited capability, is able to provide money and subsidies back to those private banks, and in a way that goes to the biggest private banks first. It's not like the small community banks get the same kind of treatment or the same level of cheapness of funds for their operations as the big banks get from the Fed. It's all proportional.
I'm glad you made that distinction with the smaller community banks. And, of course, there are the credit unions all over the country. But the total assets of all the credit unions in the country is less than the total asset of the Bank of America or Wells Fargo, the corporate criminal bank that created phony accounts in the millions, selling auto insurance, credit card accounts to customers without even telling them, without getting their okay. That's clear, premeditated criminal behavior, and they're still not criminally prosecuting Wells Fargo. But to indicate Nomi Prinz, who's the author of this new book, Collusion, that came out May 1st, How Central Bankers Rigged the World, what needs to be said again and again is there's probably no lobby in America more powerful than the banking lobby. On Congress, it's almost hegemonic. Not only does it pour money into congressional coffers, but it scares members of Congress, even progressive members, and in effect saying, you mess with us and we collapse, we're too big to fail. We can bring the whole economy down on your head, and you're going to be blamed for it. I remember when I was a student at Princeton, Nomi, and I took Economics 101, and when the time came to understand the Federal Reserve and to hear a lecture on the Federal Reserve, they passed out a paperback of about 150 pages. And I looked at this paperback, and it was the biography of the Federal Reserve printed by the Federal Reserve. I mean, the Federal Reserve basically was the textbook for millions of students at that time. So the propaganda capability is enormous. Now, you mentioned the creation of money, and this is what most people don't understand. I mean, they have to work hard for their money. They don't understand how banks can create money. And praising your book was David K. Johnston, who's been on the show, the great investigative reporter of the corrupt corporate tax system. And here's what he said, quote, After the 2008 economic collapse, central banks created $21 trillion of money to stave off a global depression. But who got all that new money? How was it used? The always insightful Nomi Prinz, after traveling the globe, literally, you went all over the place researching this book, South America, China, Asia, Europe. After traveling the globe for answers, reveals the shocking truth. And she does it in plain English so everyone can understand the awful facts. Tell our listeners, how do they actually create money? I mean, the U.S. Mint prints $100 bills, $20 bills. How does the Federal Reserve get away with creating money? And we're then going to talk about quantitative easing, trillions of dollars where they were buying bonds to inject huge amount of money into the economy. Are there any limits to how many trillions of dollars, say, the Federal Reserve can create?
No, there's no legislation. There are no rules. There is no regulation to cap the amount of money for whatever the purpose that any of these central banks can create. And it's amazing to me, $21 trillion. Now, just to put that in perspective, that's the entire GDP of the United States. So just imagine that rather than the central banks colluding together to provide that just seed capital, when I say seed, I mean banks can borrow based on it, rates are cheap because they've created so much money to buy bonds and so forth, that 21 trillion is actually much more than that. But let's just say it's 21 trillion. Can you imagine that central banks or any governments would get together and find $21 trillion for the world's actual real economy and real people? Imagine that even occurring. You can't, because that's not how our world operates yet. The Federal Reserve, the Bank of Japan, the Central Bank in Japan, the European Central Bank in Europe, the Bank of England, and so forth, mostly the G7 central banks, have been able to do this. In none of their doctrines and none of their setups is there any form of limitation, and any form of limitation to how they can use that money.
Okay, let's trace the money. They buy bonds, right, and create money that way. Where does the money go? Let's talk about the United States, and let's talk about the Federal Reserve. They engaged in buying bonds, trillions of dollars, and part of it was the quantitative easing, which is a way of saying that they poured trillions of dollars in return for these bonds, which increased the debt of the Federal Reserve, into the economy. And I want to ask you two questions here. Where did that money go? And second, could it have gone for public works? Could that money that they created have created millions of jobs and repaired schools and sewage drinking water systems and public transit and roads and bridges? Or would the Federal Reserve not had authority for that? So let's take one question at a time. Where did the money, which was about $3-4 trillion in quantitative easing?
Yeah, so the Fed created $4.5 trillion of money for quantitative easing. And I hate the word. I mean, it's so needlessly complex. They basically created money out of nowhere to buy securities that no one wanted, or to basically provide cash to the banks in return for assets, for mortgage toxic assets, and actually also treasury bonds, government bonds, to give to the Fed. So it's like you have a bunch of junk in your attic, and someone comes along and says, okay, I'm just going to create money out of nowhere, sort of manifest it electronically, and buy all your junk. Here's some cash. So you had the junk. The banks had, for example, $1.75 trillion worth of mortgages that they were happy to receive cash for in return to stuff them in the Fed's attic, on the Fed's books. The same thing happened with over close to $3 trillion, $2.75 trillion worth of government bonds. How that works, and it's a crazy triangle, is the U.S. government issues bonds. In other words, they borrow money from investors, from China, from whomever, and in return, they give them interest. They pay a little bit along the way in good faith. The lower interest rates are, the less they have to pay. So by the Fed making rates low, it allows the government to issue more debt. The banks, because of their job, one of their jobs, is to get those bonds from the government and find investors for them. Not to keep them, to find investors for them and to collect a fee for that provision. They didn't do that for the money, for the bonds that are on the Fed's books. All they did was say, thank you, government, for creating almost $3 trillion worth of debt. we'll just take that because that's part of our job. But rather than do the rest of our job, which is sell it and find investors and find basically lenders to the U.S. government, instead we are just going to literally give it to the Fed because they've just given us the money. So the entire process, I mean, it's crazy. It's basically the Fed's creating money out of nowhere to buy bonds that the banks have either freely or because they can't get rid of them. And in return for giving cash to the banks with no stipulations, no it goes into roads, or no it goes anywhere, no strings attached, accumulates that debt on their books. That's how it works. That is supposed to be an emergency measure. Of course, it's been 10 years. If they were to go the other way, to unwind, to get rid of those bonds, to ask the banks back for that money, literally then you would have an entire system collapse.
They are trying now to buy back. They're trying to reduce the quantitative easing in the last year. Isn't that true every month?
Yeah, you see, this is kind of one of the big deceits of this. Yes, they have said that. And the reason they've said that is because they would like to indicate to the world and politically that what they've done for the last 10 years wasn't for nothing, and they've got this and they have an exit plan, and the exit plan is to taper or to sell some of those assets off of their books and sort of reduce that tremendous subsidy that is currently on offer to the banks and therefore all the financial markets. However, in the last 6 months, they have reduced their $4.5 trillion position to about $4.3 trillion. So, yes, they've reduced it a teeny tiny bit, but they also, again, to the beginning of this conversation, have the ability to at any time buy more. So to me, you know, the sort of statement that we're tapering or we've sort of come to the end of this process and, you know, growth has appeared and, you know, unemployment's great and everybody's healthy bank-wise, so we're going to unwind is disingenuous at best right now.
Well, let me read a comment on page 252 of your book under the title, What Should Be Done? You quote Nobel laureate economist Joseph Stiglitz, who said in August 2015, in an article in the LA Times, quote, quantitative easing was yet another instance of failed trickle-down economics. By giving more to the rich, the Fed hoped that everyone would benefit. But so far, these policies have enriched a few without returning the economy to full employment or broadly shared income growth, end quote. Now, Bernie Sanders was critical of the Federal Reserve, and you were on the Bernie Sanders Federal Reserve Reform Advisory Council. What was he campaigning on in 2016 when the subject of the Federal Reserve came up?
Well, he was campaigning primarily when the council was, when we were looking at the Fed a number of years ago, the idea was to, you know, sort of cap what they were doing, to audit where the money actually was going and to what benefit or not it was going, and we got no answers from the Fed. And
this is, by the way, a long time. This is a long time struggle. Senator Proxmire and others wanted to audit the Federal Reserve, and the Federal Reserve saying, imagine the central bank saying, no, you're not going to audit us. So under this subject, what should be done? What did you advise Bernie Sanders, and what generally do you think should be done?
First of all, they should be audited. They should be capped. They should, to go back to this idea that they've provided all this money to the financial system without any strings attached, should be required to at least attach strings, to have timing limitations. And I personally think that these people should be publicly elected at the very least, because what happens is, you know, in our country, they're, you know, sort of appointed and then they're confirmed by Congress. In some other countries, like the UK, for example, they're just appointed by whoever the prime minister is. And so these people have this innate ability to just manufacture money without any accountability and without any transparency, without any auditing. And there's this acceptance that somehow that's going to the main economy. The Fed itself produces a report every 3 years about inequality and sort of where income distributions go. And in the last several reports they've given out, the last was 2016, they've indicated that inequality has grown. They've indicated that it's grown by more since quantitative easing than before that. They know this, and yet they don't have any accountability to actual citizens, even though they literally impose financial instability on citizens. So I think they need to be publicly elected. I think they need to be limited. I think they need to be audited. I think they need to be transparent on a regular basis. And I think they need to be accountable through literally subsidy provisions to the financial system, to big banks, for where that money goes. And if they can't do any of those things, then we need a body that can actually orchestrate stability for the economy for real, not just say that somehow, and going back to what Stiglitz said, it is a trickle-down plan, to say that somehow if we inject all this money into the system, it's going to make it out to the main economy. Only 10% of Americans own 84% of the stock market. That number is about the same in the main countries throughout the world where central bank collusion has happened. That's not a lot who benefit from the stock market, for example, rallies that have occurred because all of this money has been made available to the financial system out of nowhere. It doesn't impact people. We haven't had more than 2% growth on average per year in any developed country. We haven't had inflation of more than 1.5% on average in any developed country since this policy has gone on. It is not a policy that does what it is said to have done, and central banks need to be held accountable for that.
Well, you're predicting an inevitable financial crash. Those are your words. And basically you say it only takes one domino to fall to wipe them all out. It will begin again with the banks, cripple the markets, and devastate the global economy. And you continue to say, quote, the threat of a collapse larger than the 2008 financial crisis looms because of the plethora of asset bubbles that central banks have created and fueled, setting the scene for a disastrous fall, end quote. Here's my response. Not unless the U.S. government and the Federal Reserve go bankrupt, because they will always be there to bail out global banks and global capitalism. Your response?
I think they will try to bail out, and I think they can, again, expand their balance sheets ad infinitum. But I do think that there can be a crash before that happens, and so doing so becomes more and more expensive each time. This exercise of effective, we had a crisis in the mortgage sector because banks basically took subprime loans and created all sorts of bells and whistles and complex securities and leverage and all sorts of financial stuff out of them that literally they sent throughout the world. They sold throughout the world. And as a result of that, there's this extra level now because of quantitative easing, because of collusion, because of zero interest rate policy, because of all the cheap money that's been created and lavished on the financial system in reward for the U.S. banks basically tanking the economy 10 years ago, that now we just have a higher height of bubbles and debt and everything else. So I agree they can and they will probably do the same sorts of things when we have another crash, which is not reform the banking system, not restructure, sort of the idea of leverage and banks being able to use people's deposits and their loans as collateral for other types of more speculative, fee-producing stock price enhancing activity. And because of that, we will have another crisis. So I think both of those things are true. We did not, going into the 2008 crisis, reform the banking system to the extent of bringing back Glass-Steagall, to reducing the leverage, to really regulating from the standpoint of these central banks who are supposed to be regulators, the financial system. As a result, we had a crash. And as a result of that, it was handled very badly in terms of forethought in not having another crash.
Yeah, now the Congress is passing a law further weakening regulation of Wall Street. Some Democrats voted with the Republicans on that score, although it was denounced, the bill, by Nancy Pelosi, and Trump is going to sign it. And here we go again. The stage is set for socialism to bail out capitalism. And you know what that means, listeners? Socialism means they're using your tax dollars and borrowing from your children and grandchildren to save these enormous speculative bank moguls and how they are misusing other people's money, to quote Justice Brandeis' phrase, other people's money. So we're talking to Nomi Prinz, the author of the brand new book, Collusion, How Central Bankers Rigged the World. Nomi, you've been on the inside. You were managing director at Goldman Sachs. You ran the International Analytics Group as a senior managing director at Bear Stearns in London. You've been on the inside. You go now to these banker meetings and conferences. Am I right in saying that privately there are a lot of bankers who share your worries, who share your concerns, and who would like some changes? Can you elaborate that? And then the last question I want to ask you is, have you been on NPR or PBS, or has this book been reviewed by the mainstream media? Those two questions before we close.
So I have been in contact with central bankers. In fact, I had spoken at the Fed in 2015 about the very issue they asked me to speak on, which is why isn't Wall Street helping Main Street? And my answer to them was, well, because you never made them do that. Why would they? And there are senior people at the Fed who then and since, I've been in contact with, that are afraid that this entire exercise could have some major negative ramifications. And there is no exit plan. The same thing in Europe, the same thing in Japan. So, it's definitely on the inside worry. The unfortunate thing is that the spokespeople, the leaders of these institutions are so politically connected, and they're so sort of, in that elite circle of being able to do what they do without any accountability, just, do it and hope that they get out of their position before the world falls apart. They don't have that accountability. So yes, there's definite worry. There's public worry. The IMF, a major part of the monetary system, has been worried, as has the BIS, the Bank of International Settlements, which is the central bank for the central banks. The problem is the people that actually have the lever on the electronic production of money and what they do with it when they're in those positions. In terms of how this book has been reviewed, my last book was reviewed, All the President's Bankers, by the Wall Street Journal and so forth. This one has not been. I have been on shows from CNBC to Fox Business to the BBC. I've not yet been on PBS, although I think something I did for the BBC actually did go on PBS. But I do think that it's a really tough subject for the sort of middle and mainstream, not the business press, to necessarily get around. So I just came back from London, that there was much more sort of interest overseas in the topic than necessarily in the United States.
What's interesting, Bloomberg News has plenty of time on radio and TV. Have they had you on?
Yeah, that's very interesting. I've been on Bloomberg News many times in the past for all of my other books and topics that just pop up in the markets. I've not yet been for this book.
Well, massive bank secrecy, massive banker greed freezes out the people and makes it impossible to have a democratic society surrounding these institutions. But, when you come right down to it, it's the same thing for 2,000 years or more, Nomi Prince. It's all about lying, cheating, stealing, greed, and power. And it's very good that you can simplify this complex obscurantism that they surround themselves with, and they get the Freedom of Information law exempting bank information, the only industry it's exempted under our Freedom of Information law. And you bring it right down to clear language, precise language, a lot of footnoting, and we really owe you a debt of gratitude for doing this. I hope that in the coming weeks, listeners, you will talk this book up. You will get it for your library so people of all ages come in and start learning about how the banks govern their lives and govern their economic livelihood and put our country and world into enormous debt for future populations to be burdened by. Thank you very much, Nomi Prince. Any contact number for our listeners?
Thank you. Just all my information is on my website, so www.nomiprince.com or Twitter @NomiPrince.
That's N-O-M-I, Nomi Prince, P-R-I-N-S. Thank you very much, Nomi.
Thank you, Ralph.
We've been speaking to financial journalist Nomi Prince, author of Collusion, How Central Bankers Rig the World. We will link to that and more of Ms. Prince's work at ralphnaderradiohour.com. Now, let's step away for a minute and find out what's cooking over at the National Press Building with our corporate crime reporter, Russell Mokhiber. When we come back, we're going to talk about your privacy, or lack thereof, on Facebook. Don't go away.
From the National Press Building in Washington, D.C., this is your Corporate Crime Reporter Morning Minute for Tuesday, May 22, 2018. I'm Russell Mokhiber. The Supreme Court yesterday handed down a 5-4 decision in Epic Systems Corp versus Lewis. The decision deals a significant blow to the fundamental right of workers to join together to address workplace disputes. That's according to Celine McNicholas of the Economic Policy Institute. For over 80 years, the National Labor Relations Act guaranteed workers' right to stand together for mutual aid and protection when seeking to improve their wages and working conditions, McNicholas said. However, the Supreme Court's decision clears the way for employers to require workers to waive that right as a condition of employment. The use of mandatory arbitration and collective and class action waivers, under which workers are forced to handle workplace disputes as individuals through arbitration rather than being able to resolve these matters together in court, makes it more difficult for workers to enforce their rights. For the Corporate Crime Reporter, I'm Russell Mokhiber.
Thank you, Russell. We live in a digital world today. No big revelation there. And it's a world where very little about any of us is private anymore. Most of the time, we give our personal information away, and it gets used, usually by commercial interests who are trying to sell you stuff. And it can also be used in more nefarious ways. Here to tell us about what to look out for is our next guest. David?
Mark Rotenberg is president and executive director of the Electronic Privacy Information Center, EPIC, there in Washington, D.C. Mr. Rotenberg teaches information privacy and open government at Georgetown Law. He frequently testifies before Congress on emerging privacy and civil liberties issues and has received numerous awards for his work as an attorney. Welcome to the Ralph Nader Radio Hour, Mark Rotenberg.
Nice to be with you.
Indeed, Mark. Well, this subject, unlike international central bankers, is going to be very familiar to our listeners because I suppose most of them have a Facebook account. And right after Mark Zuckerberg testified for Congress and kept saying it was his fault, it was his mistake, he's going to correct it, which is another way of saying, don't you regulate us. He was very concessionary. And the members of Congress didn't seem to lay a glove on what Facebook was doing that made them summon Mark Zuckerberg to the Senate and the House. But a few days after that, in the Washington Post, there was an article by Stacey Kramer. And in order to set the stage for our interview, Mark, I want to read a couple paragraphs, and people will relate to it. Quote, while Facebook chairman and chief executive Mark Zuckerberg was boasting to Congress on Tuesday and Wednesday about how much his network is doing to protect privacy for its billions of users, I set up a new account to test what he was saying. I wish the result had come as a surprise. Instead, here's everything that was public or turned on by default. My friends list, my profile, which could be indexed by search engines. I could be tagged in any post, even if I hadn't reviewed it first. The site would suggest that my friends tag me in images. Ad targeting would let Facebook sell marketers the ability to find me based on my relationship status, employer, job title, education, and interests. And Facebook would use my app and browser activity to decide which ads to show me. Those were just a few of the settings I allowed automatically by clicking, quote, create account, quote. It could have been a lot worse, too. Instead of, quote, public, quote, many defaults, such as who could see future posts or who could see posts I'm tagged in, were set to, quote, friends, end quote. What's your reaction to that? And explain to our listeners why you prefer opt-in instead of opt-out.
Well, it's a great question, Ralph. Let me begin by saying that my organization, EPIC, is focused on emerging privacy and civil liberties issues. We've been at this for almost 25 years. And in fact, we've been involved with Facebook for almost a decade. And one of the key problems we figured out with Facebook at the very beginning was that the company was saying to Internet users, we have this great service. You can make personal information available to your friends and family, and you can control who gets to see it. So that was the representation that Facebook was making when it launched more than a decade ago, that you would control the use of your data, that essentially was going only to the people that you wanted it to go to, and that was the design of the service. Of course, when we did a little investigation, what we realized was that Facebook was gathering the data to make it available to advertisers for marketing, and that whole practice was being hidden from the users. And even of greater concern, once someone selected the service, Facebook would actually change the user's privacy settings. So if you had signed up under an opt-in regime, assuming that you could control the disclosure of your vacation photos to your friends or family members, Facebook would subsequently change their privacy settings, make that information available to others, and then say it was on you if you wanted to limit disclosure to opt out. And it was because of that history, as I said, almost 10 years ago, that EPIC began to bring a series of complaints to the Federal Trade Commission. And what you're seeing today is really the consequence of the Federal Trade Commission's failure to pursue the enforcement of the consent order that EPIC eventually obtained in 2011. Now, I need to provide all of this background because oftentimes we get into a privacy discussion and people call us up and say, well, what can I do to protect my privacy? And I have to say, honestly, there's not a whole lot that Internet users can do to protect their privacy. because these settings and these marketing techniques and these business practices are entirely beyond the control of the end user. It's a little bit like someone calling up and saying, I'm concerned about car safety. What can I do to inspect the thickness of my brake lining on the rotor? The answer is, well, frankly, unless you're an auto mechanic, there's probably not very much that you can do. So we actually have, with this enormous U.S. company, a classic problem where it falls on the regulatory agency to ensure that the privacy of Americans is respected and protected. And it was the FTC's failure to do that, in our view, that led to the Cambridge Analytica data breach and the congressional hearings that followed, even the hearing this past week in Brussels before the European Parliament. This is all about the FTC's failure to enforce privacy safeguards for Internet users who chose to use the Facebook service.
Well, what exactly did the Federal Trade Commission's consent decree do to protect the Facebook user?
Well, what it did was multiple things. When we went to the FTC in 2009, we documented in a 30-page complaint. This was not a letter that said, please take a look at this. This was a very detailed complaint where we actually showed how Facebook was changing the privacy settings of users after their data had been obtained. And we included in our complaint lots and lots of experts saying this is a terrible model for collecting and using personal data. And when the FTC ended up issuing their consent order, I think this was in November of 2011, frankly, at the time we were thrilled. They agreed with us. They found some things that we had missed, and they said to Facebook, you're not going to do this again. You're going to give end users affirmative control, opt-in control over the use of their personal data. You're going to be much more transparent about your business practices, and you're going to put in place a comprehensive privacy program. All of that can be found in the 2011 FTC consent order. But then something very disappointing happened, which is that Facebook continued to engage in these types of business practices. And we went back to the FTC and we said, well, obviously you're going to do something because they're now violating the consent order. There was a related case involving Google where virtually the same thing was happening. We actually sued the FTC and we said, you have to enforce that consent order. But the FTC never did. And the judge who was sympathetic to us in the Google case said she lacked the authority to get an independent agency to enforce its own consent orders. But she was sympathetic to what we had said and basically wrote in her opinion she was hoping the FTC would act.
How
But
can
they
the
never
FTC not enforce its own order since 2011, letting Facebook get away with all of this, including the Cambridge Analytica fiasco? What's the explanation of that?
I think, maybe after the Mueller investigation, it may be one of the most important questions, that we need to answer right now. Of course, we and a lot of other consumer groups went back to the FTC after the Cambridge Analytica breach story broke, and we said, obviously, now you need to go back and try to figure out what happened. And the FTC responded, yes, they were going to do that. So they have reopened their investigation of Facebook. When Mark Zuckerberg testified in Congress, there were about a dozen different senators and House members who asked about the consent order. He said, not surprisingly, he felt that they were complying. But I think what needs to happen next is actually some oversight of the Federal Trade Commission. I think we need to learn more about what the FTC is going to do to protect the privacy of American consumers.
And something you just wrote, Mark, that seemed really ominous, that you said after the debacle with Cambridge Analytica and after Zuckerberg testified for the Senate and the House, a person by the name of Jan Koum, Koum, the co-founder of the popular messaging app WhatsApp, that's global, said he was leaving the Facebook board of directors. The reasons? Ongoing concerns about Facebook's business model and the protection of user data. Now, this is quite a resignation, so to speak, from someone who was on the inside. Why did he do it, and what's your comment on this departure?
Well, Absolutely. I mean, I think this story is almost as big as the Cambridge Analytica story, but it hasn't been picked up by the press. So just very quickly, what this is about is Facebook's acquisition of WhatsApp, which was a competing messaging service. It was very well liked, by the way, in the privacy world. It had strong privacy technology, collected very little user data. Kom, who's a former Ukrainian, had very strong feelings about personal privacy, opposed government surveillance, and at one point, I think he had about 500 million users. Well, Facebook had been courting his company because it was the main competition to Facebook's messaging service. Eventually, they reach a deal, but critical to the deal is the data that WhatsApp users had provided for that messaging service, which people understood was not going to be transferred to Facebook because Facebook's privacy practices for messaging are much worse. And Kom held out on that. The FTC sent both companies a letter. Epic was involved in that as well. And then as time passed, it became increasingly clear that Facebook was going to gather up the data of the 500 million WhatsApp users and incorporate that data into their own business model and advertising practices. And again, the FTC did nothing. The European Commission fined Facebook $122 million for misleading them about that issue. And Kom, who's a billionaire on the Facebook board, was so outraged about all this, he left the board. And what struck me in that moment was that here's the person who knows about the service, understands the privacy consequences. He's basically fed up, but the oversight agency, again, is not doing what it needs to do. And that's, I think, the second extraordinary part about the Facebook story. There's the Cambridge Analytica breach, but then there's also the failure to protect the personal data of the WhatsApp users.
What about a real fundamental question and say, look, Facebook is abusing people's personal information, selling it, allowing others to resell it. People are exposed to all kinds of infiltrations, all kinds of harassments, all kinds of dread and fear about what could happen to their information. What if the answer is simply get out of Facebook? I mean, who needs Facebook? Why do people need Facebook?
Well, I mean, I think that's one answer, but in some respects, I also think it's a little bit unfair to people. I mean, they signed up for a service. They had certain expectations. You know, they built personal networks. They exchanged data with others. I think they have the right to see that those expectations are respected, and I think Facebook should be held accountable when they violate those expectations. When, you know, people leave in a situation like this, particularly when you have what appears to be a natural monopoly, I don't see any company coming along soon that's going to displace Facebook, and I don't see the choice that people have if they leave Facebook. I think that decision to leave probably hurts the user more than the company.
Mark, you put your finger on it. It is a virtual monopoly. And if it's a virtual monopoly, why doesn't the Justice Department break it up under the antitrust laws? I know one response to that assertion is because they don't charge you anything. And you know the old saying, when a company gives you something free, you're the product. So do the antitrust laws have to be amended so they can break up monopolies who don't charge people anything? They basically use the information of the consumer as their inventory to make billions of dollars in profits?
Yes, well, I think obviously it needs to be updated, and I agree with you, of course. I mean, this is a very unusual market. It's described sometimes as a two-sided market because the company takes the value from the user, which is their personal details, and then turns around and sells it, you know, in a market-based system to advertisers. But the user actually has no role in the actual financial transaction that results from the collection of their data. So people who say users can, you know, express choice or use the free market system to push for something better actually don't understand how internet advertising works.
Well, the fine print contract that you click on, you know, the terms and conditions, which most people don't ever see, even that fine print contract was the subject of Zuckerberg's commentary. I mean, he sort of admitted that it was very, very one-sided. Now, what if 300,000-400,000 Facebook users wanted to start a Facebook users group and begin to challenge the terms and conditions and begin to represent millions or billions of Facebook users against management, Facebook management, and Zuckerberg's control of the company. That would not be possible, but I hear that Facebook has blocked efforts to do that if the word Facebook is needed. Could you enlighten our listeners about that effort?
Yes, Ralph. I mean, that's a great question, and it goes back to some of the early history, which I think is very important for people to learn about before it disappears from the internet, which seems to be happening increasingly with a lot of these campaigns. But it is true that back in 2009, there were almost 200,000 Facebook users who had created a group called Facebook Users Against the New Terms of Service. And what they were explicitly objecting to was this change in privacy settings that was allowing Facebook to take personal data under one set of privacy rules and then use it under another set of privacy rules. And people were organizing online, which we thought was great, and Epic was working with many of these people, and we actually pushed Facebook to back off its proposed changes to the terms of service in 2009, which at the time seemed like a big victory. We got Facebook to create a statement of rights and responsibilities and even give users the opportunity to vote on all of the policy changes. All of that came undone when Facebook backed off its commitments, which is why we ended up going to the Federal Trade Commission. But the other thing that Facebook did, which was frankly a bit horrifying, is after that campaign, they decided that it was not a good thing to allow Facebook users to use this platform for political organizing. And they disbanded the political groups, including the one we helped create, and they prohibited the use of the name Facebook in a Facebook user group. So you could no longer create a group, even a simple group called, Facebook Users for Justice and Peace. They would say, that's using our brand name and you're no longer allowed to do it. And of course, all of this against the backdrop of the talk about how the internet is a force for democracy around the world is a little difficult to understand when the company that is the largest platform in the world for political debate and discussion doesn't permit its own users to talk about the company in any organized fashion.
What's the future here? Listeners probably know that this month the European Union, stronger privacy standards go into effect in Europe, and Zuckerberg has said that he'll observe it in this country, but we've heard that song before. But what is the future here other than more subservience to Google and Facebook, which you have said in New York Times have enormous control over that market? And both of them control 8 of the top 10 internet services. What do you think is the way out here? We want opt-in. We want consumer representation organized vis-a-vis Facebook. We want the protection of privacy, which Epic, your organization, has been the great leader in preserving or trying to preserve. What do you think is going to happen? It looks like Congress is not going to do any regulating.
Well, I think there's a real change right now. I mean, as difficult as these challenges may seem and as enormous as Facebook has become, the other part of this story, of course, is that over the last couple of years, Europe has moved forward with an effort to update its data protection law. So we now have the General Data Protection Regulation, which is going into force this week. It's being respected by U.S. companies because it is essentially the cost for them to participate in the European markets and to gather the data on European citizens, which is even a larger market for Facebook than the United States is. So we have a new privacy framework. I think there's a hope and expectation that the firms that are providing the higher privacy standards for the European users will provide the same standards for users in the U.S. and elsewhere around the world. And I think it's also catalyzed a public effort at the grassroots level and elsewhere to bring the United States up to date in the realm of privacy protection. I mean, the reality is that our technology has fast outpaced our laws, and we need to ensure that we have stable regulatory frameworks that protect privacy. And I think the good news here also is that properly understood, this will lead to greater innovation. We hear people tell us a lot of the time, well, we have to strike a balance between privacy protection and innovation. But I think that actually misunderstands how innovation best operates, because if you can provide these services on the internet and minimize the terrible problems of identity theft and financial fraud and data breach, which are widespread in the U.S., that's a very good outcome. That's not something that companies are doing today. So I think these new data protection laws originating in Europe, but likely also to find resonance in the U.S., will lead to more innovative internet-based services.
And listeners can access Epic's wonderful website for clear information, probably a lot of answers to your questions that we couldn't cover today. What is the website?
We're at epic.org, epic.org, and we have a lot of great information available there. We do run campaigns. We have tips and advice. But I think right now what we're all hoping for is that there will be this continued push in the United States for privacy reform. I think the costs are just too great. There's a real risk, not just of surveillance in the 1984 sense, but also data breach and identity theft. They impose enormous costs on American consumers, and we hope that U.S. lawmakers in both parties will begin to address that challenge.
Well, Mark, I wrote my first article on protection of privacy for the Ladies' Home Journal sometime in the early 1970s, and I applied the standards to myself. I don't have any Facebook account. I don't touch the internet. I don't have a credit card. I don't have a debit card. I don't use the internet. We do have staff who gets information for me or friends, but I really tried to opt out. And I'm not saying everybody can opt out, but if you don't have to use this noxious invasion of yourself called Facebook or Google, go for it. Well, thank you, Mark Rotenberg, and thank Epic. The website is epic.org. Very helpful, very illuminating, and this is a problem that's not going to go away. We'll have you back, Mark. Thank you.
Thank you, Ralph. Nice speaking with you.
We have been speaking with Mark Rotenberg, Executive Director of the Electronic Privacy Information Center. We will link to Epic at ralphnaderradiohour.com. Well, that's our show. I want to thank our guest today, Nomi Prinz, author of Collusion, How Central Bankers Rig the World, and Mark Rotenberg, Director of the Electronic Privacy Information Center. For those of you listening on the radio, that's our show. For you podcast listeners, stay tuned for some bonus material we call The Wrap-Up.
Join us next week when we talk to local Texas activist Barry Klein and try to make sense of Trump's trade policy with Public Citizen's Lori Wallach. Thanks, Ralph.
Thanks, everybody. And listeners, Memorial Day is coming up, and in addition to remembering our veterans, let's remember the tens of millions of American workers throughout American history who gave their lives for their corporations. Safety, health, disasters in the workplace.
Hello, this is Jimmy Leewert, the producer of the Ralph Nader Radio Hour, and welcome to the wrap-up, where we begin with David asking a question of Nomi Prinz about an infrastructure bank, and Steve asks about the coming financial crash.
Let's bring in David or Steve. Do you have any question here? And I hope it deals with something that can clarify the situation for our listeners, because I don't want our listeners to go away here feeling they have nothing to do, wringing their hands, and not urging for postal savings banks, not urging for a decentralization of the banking industry to serve human needs.
I have a quick question about fiscal versus monetary policy. Fiscal policy is what Congress does to stimulate the economy. Monetary policy seems to be what the Federal Reserve does with interest rates. If there were a blue wave where the Democrats really took hold and invented a New Deal and started an infrastructure plan where Congress was spending trillions of dollars, would that weaken the Federal Reserve? Would that make monetary policy irrelevant and strengthen the way we concentrate on fiscal policy, which is more democratic?
I think that if we had stronger infrastructure policy, fiscal policy in that direction, it would really accomplish what these central banks say they've set out to accomplish, which is stimulating real growth and having real stability on a long-term basis for the Main Street economy, which is not what has happened with monetary policy. Monetary policy, by definition, and like every single chart of quantitative easing is 100% correlated to the rise in the stock market and the rise in debt. It's really very, very clear. I personally think that if we can have this, quote, independent body, which isn't really independent, manufacturing money for the financial systems and for the markets, why not have a similar, with an unlimited amount of money creation power, or do an infrastructure bank or a national bank of some sort that actually goes into all of the things that benefit and grow the economy. I mean, I think that would be a way to do it. With Congress voting or not voting for that, I think we have a way to shape that. Congress did pass the act that created the Federal Reserve. We can create an infrastructure or national type of bank that's funded or that can create money in a similar manner. There's no reason why we can't, but that money is used for the purposes of benefiting real growth in real society. So you don't have these like quibbles every time there's a budget conversation in Congress about, how many billions go to defense versus how many, millions are taken out of education, and somehow that's equitable. And so I think that we should think about a way to have a solid amount of money go towards growth. I mean, I talk about this in the book, which is kind of a separate tangential thing. Where China did this with their, sort of version of quantitative easing, is they've actually created infrastructure and they've actually, worked on trade alliances and sort of lent money for that purpose throughout their region, which has benefited them. And there's also negatives on that. We don't do that. We don't think that an investment in infrastructure or in people is somehow a good economic investment. I think it is a good economic investment. There's pieces of our history that show that out. Now we're not doing that.
The thing that seemed very ominous to me and got my attention was your prediction of another financial crash. And how does, you hear that, how do you, or how should somebody like me or anybody prepare for that? How do you brace yourself for that? What is there to do with your money?
Yeah, I personally, and I think I just broke this down for an audience because I was thinking about my own asset allocation. I own my house. I mean, I have a mortgage on my house, and I own some specific stocks in the market, but it's a very, very small amount of what I have. And I try to keep liquid. I mean, I sort of cash in as little debt as I can, and that's hard to do. But reducing debt is actually an investment, something our governments don't understand. But for people, just having that freedom is actually, I think, very important from a financial perspective. I think I wouldn't be able to do what I do today, to write as I write, to do the books, to which clearly doesn't pay as much as it pays to be a Wall Street banker for so many years, had I not been very sort of prudent with what I did make, and not the sums people make today, but what I did make when I was a banker, by not by just keeping myself sort of as liquid as possible and not sort of overexposing myself to things that were too risky or too speculative, as many of my friends in Wall Street and in the City of London were doing. So I just have maintained that, economic pragmatism for my life that's enabled me to have the freedom to do what I do now. So, I mean, that's the kind of thing I would tell people in terms of looking at their finances.
Well, government treasury bonds.
Well, which used to provide interest, right? I mean, this is one of the negatives of this entire exercise. Is no person in any major country has the ability to just put their money in their own government bonds and receive any return for it, as they've done in the past.
Which throws them into the speculative stock market out of desperation.
Exactly. Right.
That's right.
Now, David asks Ralph a question about complexity.
I have a question for Ralph. I know we're short on time, but when you hear about the Federal Reserve and they can't audit it, and it's so complicated, people pretend to understand it. I don't even think Bernanke and Yellen understand how the Federal Reserve works. As we're moving towards authoritarian regimes around the world, if something is this complicated, there's no way voters can understand it. It's a threat to democracy. Shouldn't there be a threshold when something becomes so Byzantine? Shouldn't we get rid of it for the sake of democracy? There's no way the American voters can understand this.
Well, we should take a page from the Swedes. When the Swedes were considering whether they should stop nuclear power development, they had a whole national week of education where the radio, the TV, the universities, the colleges all discussed the issue. And then they had a referendum. And the referendum came in, no more nuclear plants. We ought to do that. That's what government should do, to inform the people. Some professors of law thinks it's a constitutional right, that the government has an affirmative duty to facilitate the political and civic energies of the citizenry. We never even talk about that. I talked about it on the campaign, but the thing that puzzles everybody and always will is how the Fed can create money, quite apart from inflating the economy, right? But how does the Fed create money? It creates it by just deciding that it's going to suddenly have $1 trillion to buy bonds from the Citicorp or Bank of America. It's amazing, isn't it? A country that's so materialistic and talks constantly about money lives in a political economy where it cannot understand how money and banking work to adversely affect them.
And then you can convince voters to repeat a lie. If you lower taxes for the rich, everybody benefits. It's so complicated. Yeah. If you just repeat it over and over again, we'll believe it.
It puts the lie, by the way, to the capitalist that we're a capitalist economy. What a joke. It's just... Anyway, I think we tried to make it clear as possible.
Yeah.
He talks clearly.
Again, I hate to belabor this, but is there a virtue to saving the democracy by saying if something's too complicated, it doesn't pass the smell test and we get rid of it? Because human nature is to make things sound. You're a lawyer. You'll throw around Latin terms and shorthand, so clients will feel stupid. Isn't there a tendency to make things so complicated we throw up our hands and surrender? In order to save a democracy, don't we have to have a smell test and say, this is too complicated, we can't vote on it, get rid of it?
Yeah, well, that's got to be Congress's job, especially with the tax code, see? Complexity is a controlling process. That's the way power is concentrated. Lawyers have learned that a long time ago, but bankers are at it, and tax lawyers do it, and insurance companies do it. It makes people throw up their hands and surrender and just basically signal, I'm yours, take me. And they do.
Complexity is a controlling process.
Here, Ralph and David talk to privacy advocate Mark Rotenberg about internet advertising.
Clarify, Mark, is opt-in now going to be the European standard?
Yes, that's the starting point, but I think it's important to understand that opt-in is just one of your many privacy rights. We certainly did want to change the default from opt-out to opt-in, but we also want people to have the ability to leave a company if they want to and have their data deleted. That's important. I think they have the right to know what information about them is being collected and how it's being used. And of course, increasingly, these systems are being automated. People are being profiled. There's a lot of talk about artificial intelligence and machine-based decision-making. We think that needs to be much more transparent than it is currently. So we've got a lot of issues to pursue. Opt-in for us is a starting point, but there are many more we'll be after.
Europeans pioneered this phrase, the right to be forgotten. And I think Americans ought to learn much more of that, because all the information they've already given to Facebook, they have a right to get it back, if possible.
There's a war that you can wage against Google and Facebook, and that I think is by clicking on those ads, because every time you click an ad, it costs the advertiser anywhere between $1 and $2. So when you get an ad and you click on it, it kind of hurts the advertiser, especially, if you're not interested in the product. That's how I rebel against it. I click on all the ads because I know it costs $2 every time I click.
That's civil disobedience, David Feldman style. It raises the question, Mark, are these ads very effective? I hear that some companies are beginning to, like Coca-Cola, pull back on buying all that advertisements on the internet because they don't see much of a return. Any studies on that?
Well, that's correct. There's clearly a diminishing return for internet advertising, but there's a related problem, which is that the internet advertising is also displacing the traditional role of advertising, which in many cases is actually to help support publications. Newspapers, for example,
Yes.
have lost a lot of their readership and revenue essentially to two companies, which are Google and Facebook. I think they now control something like 80% of the online advertising market around the world, which is an extraordinary concentration. But it's not as if suddenly everyone's buying a lot more advertising. What's happening is that people are shifting their advertising spending from a local newspaper or radio station to Google and Facebook. And I think that's also having very significant impact on democratic institutions.
And finally, David, Steve, and Ralph talk more about the uses of complexity.
While I was at Bloodroot, I was reading the Universal Declaration of Human Rights, which I don't think would be passed today.
No.
It was right next to help for the choking victim.
Yeah.
Which also wouldn't be passed today.
Right.
Before you go, I just want to thank you. I want to thank you for this sentence. Complexity is a controlling process.
Oh, yeah.
Because it's I've always felt that I wasn't smart enough.
Yeah.
And as I've gotten older, I
realize that's true?
And the cousin of complexity is gobbledygook, which, of course, is a
Right.
controlling process, the cousin. I remember once my sister came home. She was senior in high school or something, or college, and she was talking to my father about how difficult it was to understand a certain German philosopher. I think it was Immanuel Kant. And he said, "You're having difficulty understanding?" She said, "Yes, Dad." He said, "Maybe he couldn't write clearly enough."
Right.
So that's your point.
Well, I find that, and I'm sure I was guilty of this as a young person too, when I was writing, doing any sort of especially expository writing. And I see this in my kids because I've been helping my daughter with job applications and reports that she's writing.
Yeah.
And the tendency is that you gain this vocabulary and you want to use it. And it's all full of Latin root words. And, I try to tell people when they're writing, you've got to mix in. Yeah, sure. The Latin root words are the ones that are more complicated and abstract. You've got to mix in all those Anglo-Saxon roots too.
Yep.
And have that mix in there to make it kind of clear and readable. Otherwise, boy, it's very tempting to just try to impress people with your vocabulary.
Yep.
And not reveal what you believe.
Yep.